Hello guys and welcome. Now I want to give you another bonus, right, for the students of this course, and this bonus will be Fibonacci retracements, guys. We are today going to talk about Fibonacci retracements and how to use them and everything that you need basically. So the Fibonacci retracement tool is right here, as you can see under the lines, the trend lines and the horizontal lines. If you click here, you will find the Fibonacci retracement. There is also Fibonacci extensions. I will see if we are going to talk in this video or maybe some other time. This one, my idea is to be about the Fib retracements mainly, right? So, what are the Fib retracements? Basically, when you have an impulse move up or down, doesn't matter, and then you are getting a corrective move, right? There is always an impulse move and then a corrective move, and then the Fibonacci retracement level are showing you basically how much of the prior move, of the impulse move, the price has retraced. So if the price came from here to here and then it came down to 236, that means that this is like the percentage basis, how much in a percentage the price retrace. I can even put it as a percentages if you like. Levels, you can pick values or percentages. As you can see, it's a percentages now. So the price retraced 23.6% from this previous impulse move. If the price came up to here, it retraced 38.2%. Here is 50% retracement from the whole move. Here is 618, 61.80 retracement. Then 78.6, and then 100%. If price came here, it retraced 100%. Now, first thing I'm gonna do is I'm gonna switch it to values because that's how I like it. And the next thing I'm gonna do, I'm gonna change this color just like that, so it will be more noticeable. How can you add levels? Because originally in this tool you cannot find this 0.65 level, right? I add it. You can add it from here. When you double click on this Fib retracement, you can add more values if you like. Originally it's without this 6 point, but I put it because this is a very popular level amongst the traders, and this here is the golden pocket, but we are going to talk for this in a little bit. Between 618 and 65, this is the golden pocket, right? The best spot to buy on a retracement. Now, this is, you already know what is the Fibonacci retracements, right? They are simply showing you how much price retraced from the prior move. Now, how can you use that is the question, right? So you can use it for entries to enter a trade, or you can use it to take profits or to exit a trade, right? So now we're gonna look first how to use it for an entry. So if you get a nice move up and then you did not buy and you are waiting for a retracement, when this retracement start to happen, you can look for with the help of the Fibonacci retracement tool, you can look where exactly to buy, right? So the best spot is right here, the golden pocket that I told you, between 618 and 65. This is the best spot to buy if you are lucky enough. Now, many times price will not come here, so you can ladder your buys, right? This is the second best zone to buy, from 0.5 to our golden pocket, right? This is the second best. Many times price will just, let me give you another example. Many times, so the first one and the best one is if price came back to this level, but you cannot always wait because sometimes it will not really come to here, so you have to observe it if you are going to use this as an entry, right? To enter based on this, the Fibonacci retracement. Very often price will come back to the 382 level and it will start going again. Sometimes it can even retrace only to the 236 level, right? 23.6 basically percent the move. So many times if you are waiting for this, it's not going to happen. So you have to observe the price, and you can ladder buys, right? You can ladder your buys here, but still to observe what's going on, how the price is reacting. And what does it mean also? What information is giving you the length of the retracement? It's giving you information of the how strong the trend is, right? The bigger the retracement, the weaker. If price start coming up to this level here, you have to worry already. If this was a start of an uptrend or is just some pullback, right? So let me show you what I mean. Let's actually delete all this. Let's draw, or first let me find the, that's what we need, the Elliott wave, right? So let's say that you are getting a downtrend, which is a clear downtrend, something like that. How do we know it's a downtrend? Market structure: lower lows, lower highs, lower low, lower high, lower low. Market structure first always, guys. When you open the chart, the first thing that you have to look always is market structure, so you know what the trend is, right? So now this is a clear downtrend. Suddenly you are getting a move up. Actually, I can draw it with this. Now you are getting a move up, and it's starting to retrace. It's starting to retrace like this. Okay, so at this point you don't know if this is a change in trend. This might be a lower high. Let me show you what I'm talking about. So you are always getting, a high here, then a lower high, then a lower high, then this is again a potential lower high. You don't know if this impulse move up is a change in trend. So when price starts to retrace, you might be willing to buy here, but you are speculating. You don't know if it's going to make a lower low. Let's go now closer here, and I'll tell you what explain you what I'm talking about better. So you are now putting here your retracement tool, and you have to see where it's going to retrace, guys. My point here is that if price starts to go here below this 786 level, actually below this level, I'm not looking for buys anymore. Below the golden pocket, if I am about to use the Fib retracement to look for entry of a trade, below this level, below the 6.5, I will not really look for buys. I mean, it's one thing to wick down. It can wick down, right? But if the candle starts to close below this level, it's getting tricky, because this whole move could be just another wave like this, like a corrective wave, and then it can make a lower low. So don't run with this Fib retracement tool and try to buy every retracement, because sometimes it will just make a lower low here. So if you are about to buy here, you have to have a stop losses. Now you might set stop losses if price makes something like this. Let's go closer. It's not letting me to go closer. If price is doing something like this, you can enter and set your stop loss below, right? Sometimes price can wick down and close above. You can again enter here and set your stop loss below. But if the candle starts to close below this level, no, better wait and see, or just let this go. Even if it goes on you and you missed it, that's still okay. And especially if it starts to close below this level, no, it's not a good idea to buy, because it's very likely this is not an impulse move up, and this will make a lower low. So this is how you use it for entries. Again, the shorter the retracement, the stronger the trend, right? Sometimes it will retrace to this level, sometimes to here, but the best ones are here. They give you the highest risk reward, because if price started to go below these levels, you will exit, and you will know that This is just not gonna play out, because if you start entering here or even here, and then if price starts coming back, let me show you what I'm talking about. If price come here and you start to buy here, price may continue down and you will start sweating and you might exit. It can even come here, and then it can bounce from here and make a higher high, but you probably exit your position because you cannot wait. I mean, you cannot enter here and to set your stop loss here. This is not reasonable, right? So this is why I'm telling you this is the most optimal way. It gives you the best risk reward, because under this level you will exit. However, sometimes you will not get it, so you still can observe here. This is another key that I'm going to talk about. There are another idea and something key element that I will give you is this level here. Above this level, I call it pump susceptible or dump susceptible if it's the opposite, right? So if you are talking about an up move, let's delete all this actually and go closer here so I can draw better for you. Okay, so basically this is when we are talking about an up move. Let me draw it for you. And like this is when we are talking about a down move. I will show you with real examples, don't worry. I just want to for you to get it better before we start diving into real examples, and I can give you much better examples if I draw it rather than look for it in the chart for a long time. So if price came here and then bounced from here and started to go above this level, this is the concept that I will talk about, this 2.236 level. This is above this level is pump susceptible. What does that mean? It means that if price came here and bounced and came above and started to close above this level, it's probably go and make a higher high, right? It's ready to go. Above this level is ready to go. That doesn't mean that it cannot go back here and make a lower low, but many times you will see that it will not, and it will go from here. So if you see pattern like this and you are waiting with your buy orders here, this can be beneficial to you, this idea that I'm giving you, by you realizing that price might not come here and observing it closer because it's ready to go and it might really go from here and make a higher high. So this is in an up move, right? Above 0.36 is pump susceptible. Now in a down move, it's basically the opposite. So imagine that price is going down, then it's bouncing. Let's say even now, let's give another example. Let's say that price is it's retracing to the 0.5 level, 50% retracement, and then it's doing something like this and it's starting to close below this. Now I call this dump susceptible, right? Below 0.236 level, it's likely to go and to make a lower low. So this is key and it's very important, guys, for you to know, right? Pump susceptible above 0.236 level and dump susceptible below 0.236 level. Now, how we use for exits. For exits is the same, right? If you for some reason enter short here, you can use this for take profits, these levels. If you see that price is starting to bounce and to reject from the 382 level, you can exit because you are aware that you are counter trading and the price may go on you, so you might take profits here, right? Again, on the opposite side, if for some reason you went long here, which is again counter trading, you guys, you have to be aware when you are counter trading, by the way. Always you have to be aware if you are trend trading, if you are with the trend, or you are counter trading, because the counter trading is a dangerous business. It's for professionals. There is a lot of money over there. I mean, there is a lot of money to be made trading counter trading, but it's dangerous because you are against the trend and you have to be very disciplined to exit right away when you see that the trend is continuing, because you know the trend usually when you have an uptrend. Let me delete this. When you have an uptrend, the waves up are sharper, right? and they are longer. So if you are counter trading and you are entering here, you have to be aware that, let me draw it better for you. If you see some, you might get a V bottom, right? And you might be in a very losing position very quickly if you don't have the skill to exit fast if you see it, because price can come back fast. So this is my point. But yeah, you can use oops, the fib retracement for taking profits. Again, if you enter for some reason around here, or you might even enter, let's say that price made something like this. Let me give you a better example. So this retracement wave, let's imagine that it's something like this. So let's say that here you identify possible lower high, and you enter based on market structure on when the price made lower low. So if you entered here, you can use the fib retracement as a take profit, right? When price came back to 0.5 or 0.618, you can take profits. And of course, you can re-enter if price starts to go back here, because sometimes the counter trend will turn into the trend and it will do something like that, right? It will go and make a lower low. So this is how you can use the fib retracement for taking profits. You can also use it in arranging markets. Let me actually use this too. Where is the parallel channel? Actually, the parallel channel here is giving you the 50%. So when price is doing something like this and it's arranging, or let's say something like this, you can again use the fib retracement and be aware where price is. Okay, now price is at the 50 level. Sometimes it will start playing in the top of the range, sometimes at the bottom of the range. So you can basically use this to determine where price is. Is it below the 50, below the 0.5 level, the 50%, or above it? If it's above it, it's very likely to go and test the top of the range, right? If it's below it, it's likely to go and test the bottom of the range. So this is another way how you can use the fib retracement. Also, you can use it to place your stop losses, right? If you are entering, I think I already mentioned that, but let's make sure you understand it again. If there is an impulse move up and then a retracement and you are entering, you might even enter by many other reasons, right? But you can use the fib retracement as an stop loss, right? So basically, if you enter here, you might say, okay, if price starts to close below this, I will exit. Or if you enter here, you might say, okay, if price starts closing below the 0.65, I will exit, right? Or you might have a wider stop loss below this level. And so this is how you can use the fib retracement to set your stop losses. Now we can look for some example in price, right? I did not mention how you are drawing fib retracement. I should have mentioned this from the very beginning. So basically, when you have a move up, you are drawing it from the bottom to the top, right? So if this is actually a good example right here. This is a very good. Let me first see if I can make this thicker, so you see it better. Okay, now it's better. So let's imagine that you see something like this. Now we are drawing our fib retracement. You are seeing that it's starting to retrace, right? So you are drawing it, and as you can see, it went to the 0.236 level, And as you know, above this is pump susceptible, right? You remember what I shared with you before? Above this level is pump susceptible. So as you can see, price couldn't even reach to this level, and it already make a higher high. It bounced from here. It came to the, let me draw it like this. It came to the almost to the top here. It came back again to this level, and it couldn't make it below. Bears couldn't push it below the sellers, and it make a higher closing high, right? So this is a good example above the pump susceptible level 236. Now let's look another example. You are getting this strong move down, and what you see, price is starting to go, it's finding, I mean, it's rejecting first a little bit the 382 level, then it's closing above it, it's going to the 0.5. This is another key, guys. When you see price close above this level, you can expect it to test the other one, right? So you got the close here above the, when I say you can expect, don't understand me that every time will happen. You may, I mean that you can expect it to happen, not that it will happen, right? So don't get me wrong here. You can see it closed above this level, it came to test the other one, it closed above here, as you can see, then it lost it, regain it again, lost it. It's fighting for this level. The more time it knocks on it, the more time it hammers it, right? It's getting weaker and weaker. So finally close above, came to test. Here it did not even, so this is actually a good example that is telling you that probably there is no, I mean, there won't be another wave down. So if you are trying to, if you saw this nice move down, and then you are trying to enter on a short here, expecting it to make a lower low, this candle right here, this candle is not short me candle, right? And it closed without even rejecting above our levels here. So you will know here that no, I should not look for any shorts here. And as you already see, it came to test the high here, right? So let's look at some more example. Let's look at this from here to here. Another good example. What happened here? It first bounced from the two. Let me show you the levels. Let's make it closer. Let's play it together with you like we don't know what happened. So price is starting to correct and you are drawing your fib, right? So price is closing below the 236, so we are expecting it to come and test the 382 level. It came, it actually lost it, so we are expecting it to come to the 0.5. So it bounced from the 0.5 and it closed above here. So now you might be interested, right? You might be interested. You might even bought here, right? You might set your orders from here to here, and you might be buying with a stop loss below this level once it started to go. So once it started to go like this, guys, and you're already in profit, you move your stop loss to break even. Don't let it go on you, and don't let yourself to lose money on a trade that made you how much. If you set your stop loss here, this trade at some point you were up 8.5%. You should not let yourself to take a loss on this trade. This is not how it works. So imagine that if you entered here, your stop loss is now here. As you can see, it broke below, so you are going to exit on a break even. Now here is another level that you might be looking for buys. So if you bought on some of these candles, you might set your stop loss below and you are going to be stopped out on this level, and sometimes this will happen. There is no problem in that. This is one of these cases where it just was not going to work out, but there is no problem in that. It's not going to work out always. Now you can use it on any time frame, right? Let's look on something like on a weekly scale, and let's draw it to see what we will see here. So imagine that you saw all this nice move and then you started to see the price coming down and you want to buy, right? So what happened is that price came to the 382, it closed below, it broke below, came to test here. We are buying here, right? We are buying here with stop loss below these levels. You got a nice move up, but as you can see, price never even came above this level. If price started to play above here, now we can expect it to make a higher high, right? But it never happened so far. If at some point you see price starting to play above this level, above this 11,400 level, now it will be pump susceptible and you might expect it to go and make a higher high above here, this level 14,000. And as you can see here, this was actually very big retracement. I mean, for sure you should, I mean, it's not good to be buying here because you don't know, it might come and make a lower low. And as you can see, it came very close to the low here, and yes, it bounced, but still I was not going to be buying here. Here is the ultimate zone to buy, right? So let's look at some more examples. Let's go back to daily. And again, since I did not mention in the beginning, this is how you draw fib retracement. If you have a move up, you are drawing from bottom to top, right? And if you have a move down, you will draw it from top to bottom. This is how you draw the fib levels. Let's go through a few more examples and then I'm gonna cut this video because probably it's getting too long already. Something interesting that I can show you. To see how amazing the fib levels are. So this whole move down, right? Let's draw it and see where did we came to. By the way, this is a trade that I took and it was an amazing trade. You see what I'm talking about? I shorted here, guys. I'm not kidding about this. People started to short Bitcoin from here. I shorted, during all this time, I shorted it only on one place and it was here. And you see what happened. You see where exactly price reversed? Golden pocket. You will see this many times because many people know this and they are waiting these levels and many traders are trading it. This is how you see it playing out. Isn't this amazing, guys? This is a crazy move. This is on a weekly scale. It's a 343% move and it reversed right exactly in the golden pocket. It's just amazing, right? Let's see some other examples. Let's go on the daily. So this whole move down, let's check it. $382 level, bam, starting to come here below the, let me put it here for you. So when you see this price starting to go below the dump susceptible level, bam, you are getting a move down. Now let's look another one. And I probably have to cut this video. Beautiful, right? What is this level? The golden pocket from 0.618 to 0.65. So you are shorting, you are setting your orders here for a short and you got a nice, how much, 31% move down. Now let's measure last one from here to here, this whole move down. This one couldn't really make it to the golden pocket, it reverse, starting to play around this level and below. You are going, you know that it's dump susceptible, and as you can see, what happened? Actually, just exactly before the dump, it got rejected from our dump susceptible level, which is this one, and it made a lower low and it came down to 3000. We all know what happened, right? So I think this is enough for you to have understanding about Fib retracement. So I'm gonna cut this video and I hope it was useful to you.